Welcome to this episode of ACG's GrowthTV. Today we're talking about fraud, both inside and outside of the organization. And joining us today to discuss this topic from QBE North America are Antonio Trotta, Vice President of Cyber and Professional Liability Claims, as well as Kevin Mason, Lead Underwriter in the Financial Lines Department. And Tony, we're going to begin with you. Let's talk about first outsider fraud. What are some of the biggest tactics that fraudsters deploy today?
Right, we're seeing a very large uptick in business email compromises, which essentially is when an outsider will gain a foothold in someone's email inbox environment, and they'll essentially be able to direct traffic incoming and outgoing. And from there, what they'll generally do is they can find ways to see what payments are legitimately owed to customers, and then direct that traffic to the appropriate payor. Usually it's one of our insureds, who then will think they're getting a legitimate email on an actual payment that's expected to be made, just telling them to make the payment, but by a different bank account. And to the extent it looks legitimate and the voices are friendly, then they go ahead and they do it, and they're out the money. If they can't claw it back, or if they don't notice it soon enough, then they'll lose that money. And we've seen, these things happen time and time again. And I mean, we've seen the large ones, for example, on a well-known shoe company who happened to be dealing in Mexico, and they fell victim to this and lost out on $2.3 million. It was a significant loss.
And to Tony's point, the frequency is increasing, but that's also being driven with severity. It's not one or the other at this point.
Yeah, let's talk a little bit more about insider fraud and how a company's own employees can potentially become a threat.
Right. Well, the ways there are virtually endless. They're through the imagination. But I think some of the ones that we've seen within the last 2 years, and especially during the pandemic environment, remote working has given rise to a whole host of employee fraud and a vast uptick. A lot of times what we're seeing now is that accounts payable personnel, or people with authority that are allowed to make payments individually or authorize payments individually, have either created fictitious companies where they would just approve fictitious invoices for those companies, but in fact, they own the company, or they collaborate or collude with other parties to charge more for products and services than what either is in the contracted price or what's a market rate. And those are ones that are much more difficult to catch. It requires a sophisticated audit, usually to catch those. They can linger for a long time. I had one recently that was submitted by a very well-known company, a manufacturing company, for $32 million. That was essentially one of those collaboration schemes. And the collaborators happened to be the employees' brothers who were in India. And they were providing legitimate goods and services. They were just marking them up at rates that were well outside of the market.
And oftentimes, these schemes can travel globally from nation to nation, which, there's not as much digitization in some freight and logistics trading. So it ultimately creates, a large paper trail to truly discover the scheme that's ongoing.
Now, understanding the fraud threat is very important, but that is only one piece of the puzzle here. Let's talk a little bit about prevention and mitigation tactics now.
Yeah, so I think there are some common mitigation tools that are often utilized, but it's really important to have segregation of duties, whether that's in terms of payments to your bank account, withdrawing, depositing, or transferring, but also with your vendors, right? Containing an authorized master vendor list with all of your vendor contacts, and ensuring that when there's a new vendor being added, multiple people at your firm are reviewing that new vendor, or if there are any contact information changes. It's especially important with the ongoing wire fraud that is going on to ensure that there's proper callback verification, right? Someone receives an email instruction to wire money. It's really important to pick up the phone and call your vendor. This is where your master vendor list can come into play. You should have a predetermined contact that you can call, because oftentimes that fictitious email will control and have a different phone number than you have in your list. In addition, it's really important to conduct, physical inventory audits to uncover some of the more complicated, sophisticated physical schemes. In terms of the insurance market, the Fidelity Bond product has expanded their offerings to offer additional social engineering or fraudulent payment instruction coverage. But capacity is slim, and it's really important to have. So in addition to providing your normal renewal application and your financial statement to your insurer, it's really important to also fill out a long form social engineering supplemental application. If you're a global company too, I'd also stress to provide a breakdown of all your employees in each country at separate locations as well too.
Tony, anything to add?
I think, you've covered a lot on the wire fraud piece, which is great. The only thing I would add is in terms of payment duties, segregation of payment duties, I think it's important for insureds to at least do spot audits to compare, to at least verify what's being paid as a legitimate good, or that the price that's being charged is within market or contract rate.
Yeah, some really important advice there. Well, thank you both so much for joining Growth TV.
Thanks for having us.
Thank you.